Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, it's November 1st, so that means yesterday was Halloween, and I hope that everybody had a wonderful and safe Halloween last night. And to use some Halloween terms, right now, from a technical perspective, the charts look a little bit scary for interest rates, and I'll get to that in a little bit. But we saw a lot of economic data that came out here this week, and from the housing numbers, which are important to you and I in our industry, I'll talk about those here in a little bit more in depth. We saw pending home sales, and that showed a pretty big decrease. It actually showed that pending home sales were down in September 5.6%, so a pretty big decrease, a lot bigger than what people were expecting, and it's showing that well, maybe there is going to be a little bit of weakness in housing due to the higher interest rates that we saw in June and July. And so that scared the market a bit, and the market actually finished this week where interest rates were worse compared to last week. And it decreased every single day just a little bit, nothing really major. But one of the reasons is pending home sales came in a little bit weaker than expected. Now, on the other side of the coin, we saw the Case-Shiller index come out, and that showed a huge increase. So pending home sales, again, measures homes under contract, and what the Case-Shiller index measures is actual appreciation. And the Case-Shiller number was from a month previous, that was from August, where pending home sales were September, but that showed an increase of about 12.8%, and that was the biggest year-over-year increase since February of 2006, so pretty good numbers. So we're seeing both some strength in the economy, or in housing, as well as some potential weakness. The pending home sales are a little bit more forward-looking number, so let's see if this translates into lower prices moving forward. Who knows? But we'll see if that happens. Now, the big news of the week was actually the Federal Open Market Committee met this week, and they released their notes on policy on Wednesday. And basically, the Federal Open Market Committee said, and I'll just actually read this verbatim what they said, they decided to await more evidence that progress will be sustained before adjusting the pace of its purchases. Accordingly, the committee decided to continue purchasing additional agency mortgage-backed securities at a pace of $40 billion per month, and longer-term Treasury securities at a pace of $45 billion per month. So again, they can continue to buy $85 billion worth of Treasuries and mortgage-backed securities every single month. That will provide support to interest rates. So over the longer term, that's going to really help interest rates remain low. And most of the market is not expecting the Federal Reserve to stop buying mortgage-backed securities until sometime in 2014, just with all this conflicting economic data, and that the economy really is still not that strong, not on really good footing. So that's what happened in terms of the economic data. Now, when I talked about the charts looking a little scary, when we are looking at the day-to-day movement of any type of security or mortgage-backed security or equities, one of the signals, or one of the things that traders use is what's called Japanese candlestick charting and moving averages and things like that. Well, we had been, one of the really important averages is a 200-day moving average. And due to the weaker than expected employment numbers that we saw a couple of weeks ago, we'd actually broken above what's called the 200-day moving average, and that was providing support for interest rates. Well, we saw things deteriorate ever so slightly every day really this week, and we were right up against that 200-day moving average again, and now we've broken below that. So now the 200-day moving average is going to act as a ceiling of resistance to allow interest rates to get much better. So basically, we've lost some steam here, and it could cause interest rates to deteriorate a little bit going into next week. I'm advising clients to lock, but we are going to see the employment number come out for last month in the first week of November here, so on Friday. So we'll see if that again acts as a springboard to get us back over that 200-day moving average, and actually now that can provide some support for keeping interest rates low. We'll see what happens. So that's what happened with mortgage-backed securities and interest rates this week. If you guys have any questions, please feel free to give us a call. Even though the Broncos are off, we're still going to be on. So if you're working this weekend, so are we. Just give us a call if there's ever anything that we can do. Thanks for joining me with Java with Jared. Hope you have a wonderful week. Talk to you soon. Bye-bye.